Okay, so hope you have done this question. So can we check the answers? Okay, before this, was there any catch in this particular examination question? Yes, the only catch here is this part of the question, say for example 1 mark, is something new which is not there in the, and see, the moment you look at this, you understand that this is a repetition from the study material. In fact, in study material they had asked you direct method, indirect method. Okay, here they said only indirect method, and that too, okay, cash flow from operations is obvious. So I hope every other item should have been same. Okay, so they said that they wanted to show it on a gross, there were a gross sale and land purchase of 3 crore. Statement they showed it net 2 crore. Is it okay? Advice. No, your answer is no, it cannot be okay. And you have to calculate the cash flow from operations. So first thing, and they have given you the balance sheet also. So you say that if nothing is specifically mentioned, you should always show on a gross basis. So in the given case, see, whenever they say advice, you need to state the provisions. And with regard to that, you have to look, okay, advice means is there any alternatives? Alternatives are not there because there is not specifically stated anywhere. That's why they cannot show net to 3 crore. They have to show gross net 2 crore. They should show purchase and sale loss. Now we will move on to the cash flow from operation. You start with the PAT, 2,12,000. Straight away look it from the P&L account. First you look into the non-cash expenses, you get only depreciation. Then you check, am I supposed to show anything else somewhere else? Because non-cash expenses are now there. We can say loss on asset is there, but loss of asset and profit on asset is subsumed in the sale price, which is shown as an investment activity. Now interest paid will be a financing activity. Okay, done. Then we have to go for the adjustments for the working capital. And I told you the logic, like plus minus thing. I hope you have done this and you got net cash flow from operating activity 2,80,000. See, within quickly you can do this question. No much change. Okay, first question also if you are not answered, it's a 5 mark question, right? 6 mark question. See, this would have given you full 5 marks. Any mistakes anywhere? Okay. So now we will proceed to the next thing, and before we proceed into the next thing, okay, so Sana was asking on certain verbs. Okay, because in SCMP they have told you in one of the chapter. Now I would like to tell you something on these verbs. If you see, look at any question, say for example, if I go to the previous question, you see these verbs here, like they say analyze, advise, calculate. You know where they come from. See, this is not institutes this thing. It is a universal across the world. Any professional examination, I don't know about other streams like professions like doctor, medicine or whatever, but when it comes to commerce education, okay, like professional courses, you take ACCA exam, you take CPA exam, they start with this. This is one instructions to you. It makes the communication very clear, provided the other party has understood the meaning. Now, what is the meaning? There is a different verbs has got different meaning. But before that, okay, I would like to show you one very important, very nice thing, okay, which you should appreciate. Okay, which I don't think so anybody will give any importance, including me. For quite a long time, I also didn't give importance. See, every chapter, when you open any subject, do you see these learning outcomes? Did you see in what it is? What they are trying to tell here? Okay. You should know. No, you missed one important thing there. If you see this learning outcomes, they say that, look, after this, what should be your learning? You should be able to identify the core principles. That's it. Now, identify is a L1 level verb. Followed, no? So, identify is an L1 verb. There are 3 types, levels called L. Actually, there are 4. Our institute, 4 or 5. Institute has clubbed a certain thing and it has made categorized into 3. L1, L2, L3. L1 is a verb which just tests your knowledge, memory, not knowledge. So when it comes to the first part, you have to identify the principles and scope of standard. Like you should know. Like for example, if I tell you debtor covered by which standard? Why not 38? Is debtor intangible asset? Oh, tangible asset. Huh? You are able to see debtor because debtor is a tangible. If you look into this, it is the contract now. Lessee is a contract, lease is a contract. But why you are not treating debtor as an intangible asset? Understood my point? Who told? Who told? Yeah, who told? That's what you need to identify. Now, when we go to Ind AS 38, first we will look into the scope. They say, okay, even though by nature it is intangible, but we are not going to deal here. We will deal there. That's what. Now, identify the principles of borrowing cost. Like, what does the borrowing cost includes? What does it not includes? That's the scope. So your job is to just identify it. Then define borrowing cost. Define is a verb for an L1. Examine various conditions. Examine means components. Like if you have to capitalize, there are so many conditions there. Recognize. Okay, when to do, when not to do. Differentiate. Okay, like if I go to another standard, it will come with some different, like comprehend. Comprehend is a level 3. Level 1 only. Comprehend means you read and understand it. Like they start with the level 1 here, and later they may go to different things like allocate, measure, examine, advise, analyze, synthesize. Now the point is, importance of this particular thing is, any examination question what they ask, it should be based on this. Otherwise it is a fooling. They ask you to identify, but in the exam they ask you to analyze. No, they never do it. So if they, in the examination question, if anything that comes from here, see, they say examine the criteria for identifying an asset that may be impaired, indicators of impairment. So they will ask you only from that. Okay, is this asset got impaired? Then you should say no. In this, they say examine whether this asset should be impaired. Then you should say no. There are indicators of impairment. This asset is this thing which has to be impairment has to be tested every year. They will not go and advise whether impairment and all. So if we have to analyze, if we more detailed we go, then still see ABC, whatever that type of analysis has to be done, maybe it has to be done here, because L1 level questions, how much it forms? How much L1 level question comes in your exam? On day 1 I told, no? Day 1 I showed you my analysis of the past 10 examination paper, 15%. That's why 1 question or 2 questions will come, pure L1, which is based on your memory. L2, 60%. But L2, when they talk one concept. If you have observed, till now I have been showing you, they can simply complicate the things. But at any point of time, say when I'm talking about the remeasurement or whatever it is, they just speak that. They don't mix something else. Otherwise, they can simply make it very complicated, no? In one chapter, there are different aspects. But when they pick one aspect, they speak only that aspect. But that problem, they make it complicated, which forms 60% of your marks. Then L3, it is balanced 15 to 20%, where in consolidation, impairment they are trying to call you. Okay, then there say Ind AS 37 they will call you. Means other standards will come there, but other subjects will not come. Keep it in mind. Ultimately, when we are talking about FR will be either the chapter, they will ask you specific question of one chapter's one aspect, or they may mix other aspect with that question, or other chapter they may bring it there. But that other chapter bringing and mixing and giving, no, that is only a 15% chance. And they said one more thing. If you have to answer L2, L1 should be part. So again, if you have to analyze, see, ultimately study material is the base. I wish I would do that analysis in upcoming years. where you have to go specifically and identify the question. What sort of question is this? What concept has been asked? Then check whether it has come for the examination, because I told you already, the moment any question comes for the exam, from 90% its probability falls to 10%. Again, it will not appear. Then rather than leaving any chapter, oh, this is not important. But there is nothing like that, not important. Everything is important. Everything is important from the examination point of view also, from understanding point of view also. Because we have seen that. India's 37, till now 27, not even a single question has been asked till now. But somewhere to answer some other questions, India's 27 knowledge is required. Otherwise question will not understand that. Followed, no? Now that is why, analyze, advice. I am doing that, maybe, probably I wish I'll give you that at the end somewhere. Verbs. But here only while trying to solve, no, we'll try to understand. Because it needs its exposure to more of questions. Just by, I am doing that exercise from past 1 or 2 years. Okay? Just by doing that exercise, by reading, analyze means what, evaluate means what, we will not understand it. It's only when we do the solve the problem, and solving the problem, we start in trying to establish the connection between the verb asked and solution given. Then we understand what exactly is the thing. Followed, no? And actually I want to share one experience. My journey started, no? It went like this. Okay? I was been teaching FR. Somewhere I came across this verb. That to how one student cleared all the subjects except SCMP. SCMP got a very bad marks. I called that student. No, I was asking what happened, how went on, what are you? Then she said, like, sir, there are verbs and all. What verbs? I asked. Then she said, in SCMP verbs are there using this, that, they must have tightened it. Okay, then I learned, oh, there is a verb. Within few days, okay, there is a May examination, 1 week or left. One student called me, FR student. She asked me, sir, in FR, should we write theory? If this interaction would not have happened, some time back, I would not have learned. I would have given some bulldology, oh, do this, that and all. But I knew by that time, but my classes have been already done. So, what to tell now? Within 1 week, should you write theory or should you not write theory? See, I really felt as instead of that, she could have slapped me. I felt like that at that point of time. Then, yes, from then onwards, I started to work on the verbs. And I realized it took time, and it's a very good communication actually. The better you understand the verb, the better you understand how to answer this. You understand a pattern of answering. Followed, no? So don't ignore the verbs in the exam, because exam also they will fool you. But 95% I say, I trust the verbs, go with the verbs. Followed, no? Yes. So now, before we proceed into this, there is one question left. Okay, before we proceed into the next question, yesterday we discussed tax on income, because we are doing this direct, indirect method and all. There is one theory left, okay. The theory says that the tax on income shall be separately disclosed under respective heads. So there is one question which may come for your examination, because this has been appearing in your test your knowledge also, MTP, RTP also it is appearing. We will do this question and then we will do the rest of the practical questions. Which one? This is a theory question. One question they have included. See, that during the financial year 1920, Akola Limited have paid various taxes and produced the below mentioned record for your perusal. Now they have got a capital gain tax of rupees 20 crore on sale of office premises. Sale consideration is 100 crores. Income tax of 3 crores on the business profit of 30 crores. And entire business profit is the cash profit. Dividend distribution tax of 2 crores on dividend paid to the shareholders. Income tax refund of 1.5 crores for the earlier business profits. You need to determine. See, what is meant by determine? Sure, there is no confusion. You need to tell very specifically what my standard says when it comes to taxes. The net and that may include your calculations also. When you talk about determination, first you need to give the specific thing what the standard says, and then you have to explain with the calculations. Cash flow, what is your net cash flow from operating, investing and financing activity as per relevant Ind AS? Okay, now tell me here, what I'm supposed to do? Your total tax is total tax. In P&L you show under taxes. That's why we add back in the indirect method or direct method, and we show only the respective taxes under respective heads. Okay, so before we proceed, again, practical questions, you don't have any applications like this. This is only one theory question they are given. In a worst case, if they twist the question and in a practical question they include this element, yes, you know how to address it. Now, Ind AS 7 states that when it is practicable to identify the tax cash flow with the individual transactions, those are to be classified as investing, financing. The tax cash flow is to be classified as investing. That means you do the respective classification. Don't show together one single. This is the theoretical part of the standard. Now, and when you allocate it to more than one class of activity, total amount of tax paid shall be disclosed. So now how do you do it? Accordingly, business profits will be so much. What you deduct and present will be like this. You would have added full amount. Then you go to sale consideration, which is an investment activity. Under sale consideration, you deduct this capital gain and disclose. Under dividend payment, dividend distribution tax will be distributed. Followed, no? And this net will be your total cash. Add opening cash balance to it minus closing balance. Maybe this itself can come as a standalone question where they will give you the opening balance and the closing balance. Or you remember the cash account was given first problem. What about if the taxes were there? That also could have been come. Followed, no? Yes. So now we will move on to the practical question. Okay, so this question we have solved. Yes, take out question number 5. Now, following is the balance sheet of Kuber Limited for the year ended 31st March 2012. They have given you non-current assets, PP, intangible other current assets, deferred tax assets. So you have given investments, cash and cash equivalent is there. They have given you last year balance sheet, this year balance sheet. Okay, total balance sheet has been given, other equity, long-term, trade payable, bank overdraft. Now some additional information has been given. Profit after tax for the year ended 31st March is 4450. Now just check whether this, first thing you need to check is whether the change in equity is 4450. How much? 4000. But you made a 4450 profit. Just keep in mind. That means there is one gap of 450. Oh, it's the interim dividend paid. Now it's very clear to you. So you have paid the interim dividend. 4000 is the net increase in the retained earnings. Now depreciation and amortization, which is already sitting in the P&L account, they have given you, which is the non-cash expense which we need to add back. During the year ended, 2 machines were sold for 70 lakhs and the carrying amount is 60 lakhs. That means there is a loss. No, you have sold the machine for 70 and the book, okay, there is a profit. Now what must have happened with this profit? You must have added it in the P&L. So that adjustment is going to come because this sale consideration is going to come. Income taxes paid 105. They have not given me the breakup. If they give me the breakup, I would have added it back and disclosed it separately. Other non-current and current assets were related to the operations. Okay, good. So at least that changes in the working capital is going to get, we will use this now because they have not given me the breakup of what is this other non-current assets. Like maybe inventory, I don't know. Something may be there, current assets, because they are not told no inventory and all, but they said that other non-current assets are related to your operation. That means change in the working capital is going to happen and do not contain any element of financing and investing activities. Now using above information, construct a statement of cash flow under indirect method. Okay. So what do you want? You want me to do it or you will do it? You can try. You can give it a try. Okay, so we understood. It's a very plain question. Huh? So you have taxes paid. Maybe you have to show it separately. Depreciation is there. Deferred tax, what you will do? Is deferred tax is what type of transaction? Is it not cash? So what you should do? Add it back. But where is the deferred tax? Where it is sitting? Deferred tax. Okay. So if you see how much is the deferred tax here? Deferred tax asset, how much is the increase? How much is the increase? 105. So how much is the total taxes paid? Okay, so now see, you have got two types of taxes here. This is income tax paid. Now deferred tax increase happened or decrease happened? So what accounting entry you must have passed? To P&L income. No? So what you need to do? You have to, just like depreciation, you add back. Deferred tax income, whatever income entry you posted, no, that also you need to deduct. You need to deduct because depreciation is deducted. Deferred tax is understood. It's a non-cash, right? So the change in the deferred tax has to be deducted along with the depreciation. One non-cash item sitting in your P&L. Yes, sure. So this question we will do it together, okay? Because it looks simple, but it is not simple, okay? So first we'll start with the solution, cash flow from operating activity. Which method we are supposed to use here? Indirect method. So write profit after tax as per P&L. How much? 4450. Okay, now let me go back to the P&L account and just check. First thing, is there any non-cash expenses? Add. First I will add back tax. Why? Because I am going to show it separately. It's just a presentation. Even though you miss, it doesn't make any difference. Just a separate presentation, because they said the taxes related to the operating, you have to split it. Then depreciation. How much is my depreciation? 520, which they told you 500 plus 20. Is there any non-cash expenses other than this? Which is there? Okay, profit on sale. Profit on sale. How much is my profit on sale? What is your sale value? Bank account debit is 70. To asset 60. To P&L 10. So 70 minus 60, 10 is what? Added or deducted? Deduct. So I'll write plus or minus. Now, is there any other non-cash expense or income sitting in my balance sheet? Deferred tax asset. Okay. Now, because from the P&L perspective, we have done. Sorry? No. First time, see, I told you there are three categories. One is the dividend, and dividend is not sitting in my P&L. Dividend is an appropriation of the profit. I will look into three aspects. First is non-cash. Just look into all the non-cash in the P&L. Then we'll go and check in. See, if they give you P&L statement, your job is very easy. But they may give you a description of the P&L like this. Then look into the balance sheet, is there any change? Okay. Then look for the items which should be presented separately. And then go for the working capital adjustment. With this, we are done. Only three things you need to look. Fourth thing, there is nothing to look for. Now, I need to check the deferred tax asset. How much? It is 855 minus 750. That means 105 should be deducted because this is shown as an income. So total comes to 510, 4960. If you okay, deferred tax, what happened? If you go to the balance sheet, you see deferred tax asset. How much is the opening deferred tax? Is there any deferred tax liability? Cannot be. How can you show asset and liability together? That will happen only in your that analysis of the financial statement. They give you one mistake. Then you have to say it cannot be shown. Now there is an increase in the deferred tax asset. So what accounting entry you must have posted for increase in the deferred taxes? Deferred tax asset account debit to deferred tax income. That means whatever taxes paid, it must have got reduced by the deferred taxes. In Ind AS 12 we discussed this. Why we are doing that. Now, but if that is a non-cash, it's the provision, right? It's like fictitious. So you reverse it. Since this profit would have your cash, see what we are trying to look is a cash profit. And they said very specifically this tax paid is a cash tax paid. If there was any provision, that would have added back. We would have paid only, we will add back. See what we are adding back is what is debited to P&L account. What we will deduct is what we have actually paid in cash. But they said very clearly, no, income tax paid, okay, I think in the previous question. So here our assumption is, okay, just go to the provisions. Have they told you anything in the provisions? Provision for income tax is not there. So we will assume that this 105 is what is paid in cash. Otherwise, if the income tax provision was there, what I will add back is the provision here. And what I deduct here is the taxes actually paid in cash. And that I will come to know by looking at the income tax provision account. Same, any liability, opening balance plus addition minus closing balance gives me the cash payments. No? Otherwise, opening balance was not there. If you would not have paid, where this 105 would have come? Suppose, say for example, opening cash balance, opening tax provision is not there. Now, if you would not have paid this 105, in the current liability you would have seen, then what you would have done? You would have only added back, but you would not have deducted anything. Why? Because you didn't pay, no, it's a non-cash. So what you do is tax paid. Here tax provision I can, okay, for simplicity sake, tax provision. Add back, tax paid, deduct. So that we are very clear in our format what we are supposed to do. So since in the balance sheet I am not able to find 105, maybe it must have got clubbed there. I make an assumption that this is paid. So clear? First part is clear. Then is there any item which I should show separately somewhere else? Where? Gain on machinery. But this is already part, we have already did this. Actually this is realized. You did no gain on sale of machinery. It is actually not a non-cash, it is a cash. Because we received no in cash. But this should be shown separately. That's it, we are done. Then we will move to the working capital changes. Change in the operating assets. So you clear, no, Prithvi? See, our first category is all non-cash expenses, maybe tax provision, deferred tax provision, depreciation. Second category is anything which should be realized in cash, like interest income. You got money, but you cannot show here in operating. It cannot be part of your operational profit. Here I need to know cash flow from operations. Cash profit I want to know. So interest income would have added back here, deducted here, and I would have added it in the cash flow, in the investment activities. Followed, no? Like this is the only item which should go on the investment activity. Yes, now I'll go to the working capital. So working capital, first you need to look into the balance sheet. So I just shown the balance sheet here. So is my PP working capital? No. Then I will go into the intangible assets, other financial assets. Okay, now we will other financial assets. Okay, so we'll go back to the question. Okay, just read the question. What did they say? Other non-current current assets and liabilities are related to operation. That means what they said here, other non-current assets and current assets. So all these are related to your operation. So this this intangible asset, other financial assets, no? So you are assuming it should be part of your operations. You have got that ready? No, sorry. 1 minute. Okay, so you are clear, Nashru. See, again, you should feel comfortable, Baba. This type. See, this is what they do. Have you not seen in the examination clarity in the examination question? Here they will not tell you. Here they said what? Only other non-current assets are related to your operations and current assets. Followed, no? But now only question comes, what about this then? Financial assets. Okay, one thing is this financial assets, change in the other financial assets, you could have shown where? Financing activity, but what they have done it under operational activities. So, okay, no problem. If not here, you would have shown it there. Maybe in the examination they may give you more clarity or add one more thing, other all non-current, other see other non-current assets, maybe probably they want to include these both the things. Followed, no? So first write change in the operating assets, decrease in non-current assets. So decrease in non-current financial assets, are you going to add or deduct? Add. So you understood the logic, no? Easy, right? Because there is a fall, so credit it, debit cash. Alternatively, you would have told, if you would not have shown here, where you would have shown? Under the financing activity. Under investment, sorry, not financing, investments, no. It's the investment activity, right? Your financial assets. You invest in the financial assets, FDs and all, you keep it, you sell it. But what they said is the financial operational activity. Now tell me, what is the next item? So we address this. What about the other non-current assets? Decreased or increased? Increase. What you will do? Minus. How? When there is an increase, you need to debit this financial asset. Simple. Second leg is cash. Minus. And don't expect that in the study material perfect question they will give you. Somewhere one fitting they would have given. Subject matter of assumption. Okay, if you want, you assume it, sir. No, this is not part of this. This is part of the investment. Other non-current assets may have some like deposits and all, security deposits. Which one? But they said in the question that other non-current assets are operational. No? That's what is the confusion created. I'm telling you. But if you see the examination question, they would have given you this breakup. You need not break your head into this operational, non-operational. Worst case, same question comes. You remember now, oddness. Do this. The probability of you getting high mark is very high. Because they are question paper, the suggested answer is almost similar to what study material questions. In fact, they say that suggested answer is different branch, study material is different branch, examination is different branch. But I don't think so that there is no coordination between them. Our assumption. Maybe what it may be a banking activity. Yeah, who is this Kuber? See, name itself says Kuber means he must be some Kuber, no? Some banking. No, not a banking, because if you look into the balance sheet, their PP is 13,000 to 12,500. Maybe they may be an NBFCs. NBFCs will have, but if it was an, see, again you should analyze, if it was an NBFC, is the Indians is not applicable to them? Applicable, but if they are applicable, then the PP cannot come as a starting point, because if it has to qualify as an NBFC 50-50 test, it has to pass. 50% of the assets should be your financial assets. Then you could have treated it as an operations, because that is your business. No? Anyhow, followed, no? Okay, what next? I am done here. Then you go to the current assets, other current assets. Okay, so how much? Okay, we have done this 145, 800 increase. Other current assets is how much? 85 minus 195, 110. So you deduct 110. Cash and cash equivalent we are not going to do. Yes, students. Okay, so I'll tell you, but yeah, please note down, there is one inconsistency in this. There is one catch, there is a confusion created intentionally maybe, but you don't get worried. Okay, have we addressed this? Other non-current assets? Did they specifically tell that it is related to operations? Did they sell other current assets as operation? Are we going to adjust cash and cash equivalent? No, that's the last thing. Deferred tax we have already adjusted in the non-cash. Property, plant and equipment will come under investments changes. Now we are left with one. As per your analysis, what it is? Then what about these other financial assets? This also should be, see now, if you treat this as operational, this also should have been operational, no? Are you clear? So there is an inconsistency which creates a lot of confusion. So just keep in mind that in this Kuber problem, this is what they have done. They have taken a different stand. This, they took it into, maybe there is one print mistake. If you read the question, they said other non-current assets bar other non-current financial assets. They wish to tell, probably, they didn't tell. They said other current. Current assets means this, no. Followed, no? So the inconsistent treatment they have done in the study material is, this they have treated as an operation, this they have treated as an investment. So you can, if at all ditto question comes, you can do it. Possibly, what I think, if at all this question comes, what, okay, guess what may happen? Or what type, what sort of clarity they will give you, tell me? Remove that line. That my guess is they will not give you this item in the examination. Are you clear now? Because look at the question, look at the answer. I feel the oddness is only here. Rest everything is perfect. Everything is as per what they have told. But there is one oddness here. So in the examination, they will either remove this. Worst case, if it comes, what you will come? What you will do? Do follow this. Give priority to what they have done in the study material. If you want to give, or alternatively, you could have assumed something since you know it. Okay, alternatively, give one note that if you remove this, you know now cash flow from operation is how much, because ultimately it is the same thing. You say if it is removed, then the cash flow from operation would have been so much. Give one note with your assumption. Followed, no? Why? Because I believe highest mark will go to the cash flow from operation. They will look into that number. I just showed you the study material also. It is the same thing they have done. It is the same question, no change. So worst case, if it comes, you give one alternatively. If it is assumed like this is the operation. Okay, next we will move to the debt. We are done from the asset side. We are done from here. Now we will go to the here. Other non-current liabilities, correct? Increase or decrease? Decrease. So what you are going to do? How much decrease? Other non-current liabilities? 875. Add or deduct? Deduct it. Okay, so we are done here. We are done. We are done with the all. Now we will come to the financial liability. Okay, very, see, have you seen there? How beautiful breakup is given? Why they didn't do it for the asset side there? Here they are current asset, under current assets they have given. But here non-current, they are not clear there. Anyhow. Okay, so trade payables, what I am doing? Increase in the trade payables, I am going to add. Other current liabilities, there is an increase, I am going to add. What about the OD? Bank overdraft. It's the cash and cash equivalent. I told you, no, there are only two items which is different. So which will be different? Now your balance sheet, cash and cash equivalent, and your, this is going to change because of this overdraft. One difference. Yes, so with this, you got cash flow before tax, deduct actual cash tax paid, you get cash flow from operation. Yeah, that's why I told you we will do it together, because I know that this particular thing, no, is confusing. Now, are you okay, comfortable? Understood? Investment account, unless they are banking business. Unless they are banking business, that we have seen, no, because for them it is an operation. Initial theory part we have seen, and we cannot make any assumption that they are into banking, because look at their balance sheet. PP is the major item there. So make some reasonable assumptions. Okay, are you done? Complete? Yes. Next is what is my investment activities, cash flow from investment activity. You got money from sale of machinery. Straight away they said 70. Then is there any item, you tell me? Purchase of PP is there. So I would like to know what is the amount of purchase of PP. Yesterday we have done in some of the question. 1070. Is there any other number? Everybody is okay with this number? 1070. Look at the PP in the balance sheet. 12,500 was the opening, 13 is the closing. 1060, 1060. What happened, Dhanush? 1070? Yes, others? Okay, how do you do it? First of all, you start with the closing balance. How much? 13,000. Minus, what is your opening balance? 12,500. Now, this should have given you the purchases, but there is one depreciation. How much? So, what you are going to do with the depreciation? Add 500. Then there is a sale. What you will do? Add how much? 60. 70 is the sale, no. What accounting entry you pass in the ledger account of the PP? Yeah, what accounting entry you pass? Back account debit 70. 2 PP 60, no. So what you need to add back is only 60. So it is 1060. I'm not clear, Dhanashree. Sorry? Okay. In DT. Yeah. Anyhow, no problem. So are you clear, students? Now, see, this was that theoretical question. 1 mark question they asked you. Should I show it on a net basis and show profit something separately? No, we will show sales separately, purchase separately. That 1 mark question, no? Don't show it on a net basis. Okay, then is there any other thing? Intangible assets. So how much is your purchase of intangible? This should be very easy for you. How much? 40. How did you get 40? Closing minus opening plus amortization. You don't have any much problem there. Is there any other item which you have not touched in the balance sheet? PP you have touched. Investments which were in the current. How much? 200 is the sale. Now, alternatively, if you said the non-current investment is also part of this, you would have considered here instead of doing it. It's the same thing. What you would have done there, it would have come here. So it is very easy. After you do this, if you are confused, you want to note alternatively, if it is considered, my operating cash flow would have been this much, my investment cash flow would have been this much. So we are very clear now in your approach. Yes, we are done here. We got now cash flow from financing activities. Now you have paid the dividend of 450. Is there any other item which is untouched in the balance sheet? Is there equity capital changed? No. Change in the retained earnings, that we already addressed in the operations. The only thing is left now, the long-term borrowings. With that, yes, literally we have put, if you can use the pencil, please use the pencil and start putting the tick marks there. See, when we prepare a cash flow statement, every single item of the balance sheet and P&L has to be ticked 2 years. Nothing should remain. Because ultimately your accounting entry would have gone here, there, here. You should have addressed. So only one item was left, was the payment to the borrowings, which is very easy. You are going to deduct it. Now this problem looks simple. And we have understood where there is a catch. Yes, so you, what is your opening cash? Actually, you got from all the activities, you got a negative cash flow. Sorry, what is your 400? Very good. Why? Because there is one item you have still not touched, no, OD. If you have, see, it's a very simple, no, don't you think? It's a double entry here. If OD would have shown it as a part of your working capital change, it would not have come here. So obviously, your balance should tally, right? And this exercise is extensively done at the inter-level. So you should not find it difficult to catch it back again. Because at the final level, it's a very simple thing, what we are doing. And just a matter of practice. You understand? Come on, consolidation is tough. After consolidation is this big deal. And in fact, in the consolidation, I said, no, 2 hour big problem. They had given cash flow statement previously. But this time, new syllabus, they have removed it. So we'll keep it. I'll give you. Have you seen that Ishwar Limited and question? Vinayak Limited. Okay. Anyhow, after you finish, I told you, it's all priority 2 or priority 3. Yes. So now, with this, we are done with the first part, which is direct and indirect method. So practice this question thoroughly. Are you clear? So concepts are clear to you? Why we are doing, what we are doing, taxes comes to what, how to touch each item of the balance sheet. They may ask you direct, indirect. More importantly, they may take that theoretical question what we discussed, which activity it is, banking, this thing. Worst case, they may give you in this one of the item. That's it. So besides this, you don't have anything. Yes, now we will understand forex transaction, which is a final level question. And if you see, one question has been asked only till now, and 2 other questions have been asked here under the second group. Now, what is this forex related thing? See, understand this concept. Yes. See, forex gain or loss. Okay, we should have done Ind AS 21, but doesn't matter because you know that already at the inter-level also it was there. It is same. All these things what we are doing is not different from previously. We know that all the monetary assets at the end of the year, are you supposed to restate with the closing balance? With the monetary assets like cash you have got, debtors you have got, because we don't have called a concept called a current, non-current, financial, non-financial. We come with one different terminology called the monetary, non-monetary. No, suppose if I ask you income tax liability, is it a financial or non-financial? It's a non-financial. Why? There is no contract. Is it monetary or non-monetary? It's monetary. So we cannot go with certain set of classifications, which we will see in detail. We will discuss. Since we are not yet done Ind AS 21, I'll just give you one gist. We have to categorize the items of the financial statement into monetary and non-monetary. And monetary items has to be restated if it is designated in the foreign currency at the closing rate, spot rate. Now, when we are going to, again, other translations and all, we will keep it aside right now. We will not get into. So, we, in this process of translation at the end of the year, we end up getting gain or loss. And standard tells very clearly that gain or loss has to be transferred to the P&L. So, I have got some debtor initially, which is $100 debtor. At 50 rupees, I have booked him. I have not yet received that money. At the end of the year, the dollar becomes 60. Am I happy or sad? There is one debtor whom I exported, and he is supposed to pay me $100. It was I had to, the spot rate was 50. He has not yet paid. At the end of the year, the spot rate has become 60. Am I happy or sad? I am happy. Why? Because my increase, there is an increase in the realization. Did I realize it? No, this becomes realizable later. But what should I pass any accounting entry for this? Yes, that is what my Ind AS 21 says. Debtor is a monetary, no, expressed in fixed amount of currency. So I am supposed to restate. So what accounting entry will pass at the end of the year? Debtor account debit to forex gain. Now that forex gain is sitting in my P&L account there. Did I realize it? Did I realize? No. It is unrealized. Followed, no? Like that, then I might have taken external commercial borrowing from USA. It's a liability to me. A liability has to be restated. In this restatement process, I end up getting loss or profit, whatever it is. That is also not realized. So, when I talk forex gain or loss, primarily I'll put this all gain, whether realized gain or unrealized gain, into two buckets called on debtors, creditors, loan or whatever it is, and on cash and cash equivalent. Now, if it is debtors, creditors, loan, etc., there can be two further categories. One is called a realized, another is unrealized. Realized is when I receive the cash. He pays me 60 rupees now. Closing rate. Yes, I realized it. But previously my accounting entry was for 50. He pays me 60. So what accounting entry will pass this time? See, initially when I sold, I passed one entry, customer account debit to sales. How much? $100. And the standard says, since the dollar is designated in Euro currency, convert into home currency. So I did 5,000 rupees into rupees. At the end of the year or before the end of the year, whatever it is, he paid me $100. But on that day, dollar rate was 60. What accounting entry I should pass? Bank account debit how much? 6,000, because I received, if I say $100 is there, on that day worth of $100 fair value. Dollar is a financial asset. At what value you should recognize the financial asset? Fair value. What is the fair value? 60 rupees. 2 debtor, 5,000. 2 gain. Is this realized? Yes, this is realized. So if I pass one accounting entry, debtors account debit to forex gain for the sake of restatement, it is unrealized. If I pass the debtors bank account debit to forex gain, it is realized. Are you clear? So I have got two categories. The standard says that if you have realized, that means this accounting entry would have passed on debtors or creditors or operational, then do nothing if it is on debtors and creditors. And if it is on that loan, you reclassify. That means you take it to that particular respective head there. Financing or investment activities. Now, what if it is unrealized? It's a non-cash entry. Reverse it, finish. Simple, no? Understood the logic? That's it. You didn't realize. Now, what is the accounting entry? Debtors account debit to forex gain. So, this forex gain has hit your P&L account. So, when you say profit after tax includes a forex gain there. That restatement happens as per Ind AS 21. When they give you PAT, profit after tax, my only question is that profit after tax includes unrealized forex gain? Reverse it. It's a non-cash, no? Reverse means what? If it is the forex gain, minus it. If it is the forex loss, add it. Yes, cash flow statement. It is coming from 21, no? As Ind AS 21 is a forex related thing. As per that, you pass the entry first. Then you prepare P&L account. So P&L will have it, but cash flow statement will not have it. Like depreciation, simply I will ask you one question. Am I not adding back means am I not reversing depreciation in my cash flow? Have you reversed in P&L account? No. Ind AS 16 gives you that depreciation, but cash flow statement says no, it's not non-cash. Perfect. Now comes one more thing. What about if I have got $100 in my hand at the beginning of the year, and at the end of the year $100 its worth is 5,000, and as per Ind AS 21 $100 I have restated at 6,000. Did you realize? No. Why? You didn't realize. Why? Because you still have 100. You sell that, get the cash, then I say it is realized. So what you need to do, reverse the entry for CFS and prepare one reconciliation statement. You have to prepare one reconciliation. This is that another difference between your cash balance in the cash flow statement and your balance sheet, cash in hand in the cash balance sheet. Okay, I'll give you certain example. Okay, your PAT is 1,000 rupees, which includes on debtors realized gain, a bank account debit to debtor. and on creditors unrealized gain. Followed, no? Unrealized means you have restated it. Realized means the customer has paid you. And on loan taken realized gain and on loan given unrealized gain. So I have given you 4 categories now. Out of that, 2 are realized, 2 are unrealized. 2 are belonging to operation, 1 is belonging to finance, 1 is belonging to your investment activity. So if I have to prepare, what is my cash in hand, closing cash in hand? Just okay, tell me. If I have to look only these 4 entries, see 1000 rupees is the profit. Okay, assuming that entire amount is okay. In this, did you how many unrealized gains are there? 20, 40. So you say, sir, at the end of the year, irrespective of whatever, 940 rupees should have been there in my hand. My closing cash balance is 940, no? So how do you give that reconciliation? How do I tell that 940, how much came from where? Okay, now I'll prepare the cash flow statement. See, I start with the cash flow from operating, okay, profit after tax, 1000 rupees, correct? Now first, realized gain on debtors. Will I do anything? No, because it's from operation, let it remain there, you realized it. You want to add back, what you do? It's realized in cash, no. That's why do nothing. Then the unrealized gain on creditors, minus it, because it's already added here, minus it. Are you going to show somewhere else? No, because it's unrealized. It doesn't matter whose it is, it's just unrealized, like loss on sale of asset. Next, realized gain on loan taken. But it is the loan taken, financing activity, but it is realized. Minus here and show it under the financing activity. And the unrealized means don't look into it, just reverse it. It's the non-cash. And now if you see, my cash flow from operations 910 and from financing activity 30, so you got the closing balance. Now any gain on, followed, no? Now any gain or loss on the CC shall be reversed and presented in the CFS with the balance sheet. So if it was in the $100 change, so PAT is 1000, unrealized gain on CC is 1000, opening cash is 5000, closing cash is 5000. But actually in the balance sheet, if I look, what is your cash in hand? 6000, because you have got $100 into 60 rupees. Now there is a difference. What you show in the balance sheet and what you show in the cash flow statement is different, no? That's why immediately after the cash flow statement, you will prepare one reconciliation statement where you say closing balance as per the cash flow statement is 5000, add back unrealized gain on the CC, closing cash as per the balance sheet. Things are very clear for someone. See, in FR, presentation matters, along with the theory, and you have to think that the evaluator is like an investor. You are like that financial statement preparer. You need to give them the clarity of what clarity you have got over this. Should not leave any element of confusions there. AFM, nothing. You do final answer, you got finish. Methodology, these processes are not interested. Nobody is interested. But here, the way you speak, okay, it should be this is the provision, this should be presented like this, and this is the reconciliation. Anybody looking, actually they are not looking in answer. What they are looking? They are looking clarity of your thoughts. Followed, no? Because when you are clear, you will present it like this. Okay, now we will solve some problems, then we will understand better with the forex transactions. An entity has got a bank balance in foreign currency aggregating to $100, which is equivalent to 4,500 rupee. For simplicity's sake, here, not in exam, assume no other transactions have taken place, so that you can see only the effect of what I have shown now. Anyhow, you can just proceed this because I already discussed. And there is only change in the bank account. The entity reported a PAT of $100 rupees on account of the exchange gain on the bank balance. That means there is an increase in the bank balance to 4,600 rupees. What would be the closing cash and cash equivalent as per the balance sheet? So they may ask you like this, understand it. What is cash equivalent as per the balance sheet? In this, what they are expecting is prepare a cash flow statement and then tell me what is as per the balance sheet from the reconciliation statement. It's a half question there, where they are telling me preparing cash flow statement. That's what I told you. Don't trust this question. Just understand the process behind it. Okay, take out solution. PAT. How much is my PAT? 100 rupees 100. They said no, profit is 100. Now deduct unrealized gain on CC 100. So cash flow from operations, how much? 0. Cash flow from financing, how much? 0. Cash flow from investment, 0. So net cash flow, 0. You understood this skeleton, no? So this one concept on a standalone basis. This can get mixed with other aspects there. You should maybe in Kuber they may ask you in the balance sheet $1 is sitting there in the home currency. Then add opening CC. How much is my opening CC? 4,500. So this opening CC is added with the net increase in the cash flow. How much is my closing CC? 4,500. But in the balance sheet, how much it is there? 4,600. As per Ind AS 21, it has been restated. Now prepare a reconciliation of CC. CC as per CFS cash flow statement 4,500 plus unrealized gain 100 4,600. CC as per balance sheet. Understood now? That's it. Finish. Simple. Clear? Any doubts? Anyone? Understood the concept? Very well? Okay. Yes. So please pause the video. See again, what they have, if any study material question was there, this is the only question is available, which I told you, I explained. Every student faced this problem of Jan 21. So they got one question in exam. How many marks? 5, maybe 5 marks. 5 marks. And please be judge, look into the marks. And already told you, they will set the trap there. A 10 mark question, they will give us a 5 mark question, they will give us a 10, one danger element. Does it make sense to you that number of marks versus what you need to do? Yes, reasonably yes. So I want you to prepare the extract of the cash flow statement as per and also show foreign exchange profitability from these transactions for the year. So what you are supposed to show? So you have to prepare that extract of the cash flow statement and check if you want to do any workings or whatever it is. You can do check any workings or whatever. Okay. So can you please pause the video and work out, students? Okay, so your doubt is foreign currency approach, or is it applicable here? See, foreign currency approach, home currency approach is applicable only in one impairment chapter, where we have to find out the value in use, present value of the future cash flows. Come on, I just solved, no? It's the same previous question. It's the same previous question. No change from the previous question. They will give you different dates. But that home currency, foreign currency concept doesn't come here. No. The home currency approach, foreign currency approach comes if for different year, if they give you different cash flow, and you have to find out the present value of the future cash flows. Cash flow should be in rupees only. Z Limited in India. Now whom you are doing this? Z Limited. No, you have to prepare the, see, cash flow statement is prepared only at the end of the year, 31st March 2020. Okay, so since, see, India's 21 we didn't discuss. Now what happened here? It's the same question like previous. You started with the cash balance of 7,000. Is that 7,000 remained with you till the end of the year? No, because somewhere you have purchased some $280 worth purchases, which is your investment activity. Now this will reduce your cash balance, and your cash balance will be 6720. Now you have to restate it at the end of the year using which rate? Because this hint I will give you. Using which rate you have to restate? 71.50. Why? Because it's your monetary asset. Now by restating it, your cash balance as per INR balance versus cash balance as per the end of the year, if you check the cash balance, it will be different. So that you have to reconcile, and because of the purchase of the PPE, at which rate you purchased? 71. You have to prepare one cash flow statement. Yes, students, so we'll do it. And my objective of giving this question for you to solve is again same. There is no precedence, no. And if you ask me, sir, is this question there in the study material? I say yes. Where? The previous question. What is that? Illustration number 10. Or whatever, the previous question. It is not different from the previous question except twist. They have to shade it. Now, they said Z is in India, has got overseas branch in USA. The bank account having balance of $7,000. Okay, which is nothing but the previous question, it was $100. $100 or whatever it is. Yeah, $100. On 1st April. During the financial year, this was not there in our previous question. They said there is no other transaction. This was there. This extra one addition was not there. That's it. Now exchange rate between, they have told you 1st April exchange rate. Yes, why do I need this? Opening balance to convert, which was 45 rupees in our previous question. 30th November, since they added this one, they gave you one new line item. 31st March, why do I need this? To translate, which was 46 rupees in my previous question. Average rate they have given you to simply to confuse you, because there is no P&L item sitting there during the year. If at all P&L items are there, it will be translated at an average rate. And this is applicable for the translation of the financial statement as a whole. Now prepare the extract of the cash flow statement. See, first thing, in the previous question they said rupees 100 is your gain. Why? 4,500 minus 4,600. What is that? Rupee 4,000. That means $100 are converted at the opening price minus $100 converted at the closing price gave you profit of 100 rupees. What is that profit in this question which they didn't give you? So I need that. So first thing, you start with the calculation of the gain. You see, my opening cash balance in rupee is 4,90,000. You purchase one computer. Did you purchase it on credit or cash? How did they say that? They said, what if it was on credit? Then this will not would have got deducted. Ulta, one more new item would have come called a creditor there, and it would have become one adjustment or investment in financing activity or something. Now, at the end of the year, in rupee, this should have been your balance. But now Ind AS 21 gets attracted and says that, look, do you have dollar in your hand? Yes. How many dollars? 7,000 minus 280. 6,720. And since it is a monetary asset, what is your closing rate? 71.50. So 4,80,000 should be your closing balance of cash in hand in rupee. So the difference between these is 10,360. Did you get this number? Any mistakes here? See, this is one working note is going to fetch you marks, at least 2 marks. For me, mark allocation will be 2, 2, 1. Where is the realized? Is this realized or unrealized? Which one is realized? There is no gain loss, no. You purchased and you paid it. Okay. So, this amount is an unrealized, no. Don't get into inside. Okay, but what is your accounting entry here when you purchased a computer? Computer account debit to dollar into at this rate. You convert it. So, this is a cash paid for that computer. Okay, it's not a realized or unrealized. Okay, if it is realized, it is already sitting there, no. Leave it, it is sitting there, you don't get into it. Okay, finally you need to look into unrealized. Now you go to the indirect method, working note. First, what is your profit after tax? Same, because they said there is no other transaction. Unrealized gain, you are going to add it back, deduct it. So cash flow from operation is nil. Acquisition of PP is going to get deducted, because it's your cash flow from investment activity, no? Financing is not there, so you have got a negative cash of 19,880. How much is your opening cash in hand? 4,90,000. Closing cash and cash equivalent 4,70,000. But if you go into the balance sheet, you have got 4,80,000. So this is the, okay, did you get this financial statement like this, cash flow statement? That method fine, doesn't matter. Did you get the cash flow from operations 0? No, 0 cash flow from operations 0. Cash flow acquisition of investment activity 19,880. Finished, no, doesn't matter. Direct method, indirect method doesn't matter. Okay, done? Are you clear? Now, are you going to restate that PP? No, Index 21 says only monetary asset. Non-monetary asset, you are on the same rate, on the date of acquisition. So, you don't have any gain or loss on the PP. Next is the reconciliation. You start with the cash flow as per the statement. Unrealized gain 10,360. Closing cash balance sheet of 4,80,480, which is matching with the balance sheet. Have you prepared this reconciliation? Yes. 1.5 means 70 minus 71 points. So you are telling 70 minus 71.5. You multiply with how many dollars? 6,720. How much it comes to? You cannot do that, Papa. You cannot do that, because if you see there is one element of loss is already sitting here, no, 1 rupee. And this is the process. When you are restating, you go to companies, when you do this job, no, it becomes a madness, like, Papa, how many transactions will be there? How on transaction to transaction basis you cannot do that. So the process of, because I was doing that in my company, that through SAP. This job I was doing through system. Why? Papa, so many customers, so many data. So our job is just click one button, system will do this, find out opening values. They check the closing balance in rupee, and they will check the calculated balance based on the rates what we feed, and system itself will pass this entry. So this is the process in which I understood your way of calculating, but that is not the way. You cannot calculate that way, because so many transactions would have been there. If this was not there, then your working would have been perfect. Clear? Yes. So did you see how the exam question comes based on one example, how they twist that? So you cannot underestimate any of the example questions also. Z Limited has got no foreign currency cash flow for the year 2017. it holds some deposit in a bank in USA. Okay. The balance at the 31st March 17 and 18 are 10 lakh and 1 lakh 2000. Now what is that extra 2000? Maybe interest. The exchange rate was 45 because dollar fee it has increased. Previous question it remains same. Now the same on 31st March was 50. Okay, that means there is a gain also, unrealized gain. The increase was in the account of the dollar 2000 is on account of the interest credited on the last day. Thus the deposit reported were 45 lakhs in the balance sheet on 31st March 2017. Perfect. Because this deposit is the monetary asset, FD. You stated at a closing rate on 31st December 2017. Perfect. And was reported on 51 lakhs on 31st March 2018. How? 1 lakh 2000 into 50. How much it comes to? 51 lakhs. How it should be presented in the cash flow? Okay, first thing, can you tell me, is there any forex gain or loss to me? Working note number 1. So I want you to do one working note. There is one forex gain. How much? How much is the working note? Okay, they have not done this, but we can do this. 5 lakhs. Yes, students, so it's the same like previous question. My opening cash balance was 45 lakhs. In the previous question, what did I do? I minused PP. In this question, I got interest. So interest income is how much? $2,000. But as per Ind AS 21, this income since came at the end of the year, it would have been recorded at 50 rupees. Somewhere at the middle means you would have taken an average. So your closing balance as per INR should be 46, but restated value is how much? 1 lakh 2000 into 51. So 5 lakh is your gain. Are you clear? So what did they ask you in the question? How this transaction should be presented in the cash flow as per Ind AS 27. Can you tell me, students? I start with the PAT. How much is my PAT? Okay, I'll do it. How much is my PAT? Then is this forex gain is not part of my P&L? See, this question and previous question same, Baba. Again, I'm telling you. Okay. So I'll start with the PAT. PAT is how much? 6 lakhs. Out of this, interest income is 1 lakh. And unrealized gain on the cash and cash equivalent is 5 lakhs. Perfect. Understood? No? In the previous question, since you purchased a computer and there was no other cash transaction, you didn't do it. See, it's an RTP question. Which one in the previous question? In my working, I had done that. Because it is coming from accounting entry, Baba. When you say PAT, think of a journal entry, no? It's not a format, understand it. There are journal entries behind it. You have to be thorough in journal entries. That presentation is important. We have to show this presentation, how it is coming, what it is coming. Now, okay, now you tell me, what should I do next? I will minus less unrealized gain. How much? 5 lakh. Did you not realize it? Then what should I do? Yeah, exactly. Second thing is minus interest income. Perfect. That's what I tell you. See, this is all concepts. Huh? You have to be thorough with it. Just look into the P&L. Imagine. You have to be good in imagination. Think. Okay, cash. This is the non-cash. You finished all non-cash. Think. Is there any item belonging should be shown somewhere else? Yes. Have you realized it? Yes, you realized it. Did you restate it? No. If you would have restated, the restated portion is unrealized one for you. That would have reversed permanently. But this you realized. Now under where investment activities, you will show it as an interest income. I hope now this question should have got a very good clarity on. You got the cash? No. Did not get the interest income. Change is later. That is only this 1 lakh portion. Restatement happened only for that 1 lakh portion. But did you not get this money? $2,000. That will come there. The change in CC will come. But 1 lakh is not a change in CC. No. 1 lakh. Did it result from the exchange rates? Interest rate is bifurcated. Okay, in the previous question, have they told you interest was sitting there? No. Then if interest was there, we should have done this. That's why this is a standalone plug and play concept. In Kuber Limited, this may come. Anywhere it may come. So understand it, how I have to address. But they don't do it. Yes. You have to present it in a cash flow statement format. And that is not our format. It's already given by someone. You take any annual report, you find this. This is the way people will understand. Otherwise, which other format? I don't know. Presentation, because they said, see, extract, if they say, I don't know. Okay, next, from all activities, opening cash is 45, closing is 46. But problem is, your closing cash is 51. Okay, so here cash and cash equivalent, you will show only this. So there, unrealized exchange gain. Now there you in the reconciliation, you show Dinesh. Are you clear? So I'll move on to the reconciliation. 46 is my opening. Cash as per CC. 5 lakh unrealized. Balance sheet is 51. Now there is a theory, because in the exam they may ask you to determine, or I don't know. See, we look into the question. If they ask you extract, give this. Followed, no? If they ask you extract, you give this. If they don't ask you extract, if they come with some other verb there, then you may have to explain the theory. Okay, again, you need not do it. I will just show you. Please read it. It's already, I will be sharing this PDF with you. Okay, are you clear? See, now since we have done this, see how to answer an examination question if it comes with a different verb. If they extract, then only you have to give. Otherwise, they may not give you mark if the strict correction happens. So you have to say that the cash flow arising from the transactions in the foreign currency shall be translated by applying the exchange rate on the date of the cash flow. In fact, what we have done is not a solution. I think, and now I understood. You remember at the beginning, I have said for our understanding. It's for our understanding. Now, as per study RTP, this is the answer. Anyhow, since material is available, now you read and understand how to present in examination. Previously, in the examination question of Jan 21, they specifically asked you extract. That's why we presented it like this. Here, I don't know what they are going to ask. So, cash flow from foreign currency shall be translated. Thus, P&L account should be credited with the income of 1 lakh rupees on account of interest and exchange difference of 5 lakh rupees, which we knew. Then, in preparing the cash flow statement, the unrealized gain of rupees 5 lakh shall be deducted from the net profit, because these are all not cash flows. We are writing in the form of a theory. Why? Because again I told you, look at the verb. This is what we are asking. Now the interest income will be deducted from the net profit to be shown separately under the operational activities. Cash flow from investment activities. However, the effect of the exchange rate on account of changes shall be reported in the form of one reconciliation statement. Thus, the exchange gain shall be added to the opening balance sheet in the note to cash flow statement in the form of reconciliation. This is your perfect answer for exam. Are you clear about this? Sorry? This is what you should answer. You have to explain it. How do we know? Okay, that's what we should see. What did they ask you? How these transactions should be presented in the cash flow statement. Have they used any verb here? Present is not a verb. No, they have not used. This is called keeping us in dark. Which in the new syllabus, if you ask me what is the change, that is the change. Previously, same question was there in the study material. Say for example, in the new syllabus, they said advise how this transaction will be this, interpret how this transaction will be this, present how this, like that type of verbs they have used. Identify, analyze how this will be done. So by looking at that verb, you have to tell. Say, probably they may say analyze how this transaction. Analyze means there are components. So highly probable, please make a note. In the exam, they may say analyze how these transactions will be presented in the cash flow statement. Yes, sir, you are clear now. So analyze is the verb because that seems to be more appropriate because there are components. So that's why you start with what standard says, then you start analyzing, oh, where this should go, where that should go, how you should account this. That way it goes. Yes, so next, last question on this particular forex related. An entity A, Indian company, purchased goods for resale from France during January for euro 10,000. Exchange rate 1 euro is equal to 70. And the credit period is 4 months. Now what happened because of this? There is an increase in the liability now. What is the accounting entry? No, what is the accounting entry you passed on day 1? Inventory account debit to creditor account. Because if you say purchases, if you don't tell, it's an inventory at the end of the year. So it accounted the purchase of inventory for 7 lakh rupees, 10,000 euro into 7. Whenever it purchased. Now 31st March came and the exchange rate is become now 65. This would mean that the unrealized gain due to fluctuation is 50,000. Why? Since the payable will be recorded for 6,50,000 at the closing rate. Why? Because among these two, who is my monetary? Creditor. Inventory is not a monetary, so inventory you are not going to restate now. And if you restate the creditor, so you are going to make a gain. Why? Because your exchange rate fell down. Now assuming inventory is unsold, how the movements will be reported? Simple. Sorry? It has no? Why? In the cash flow statement, don't you have any impact of not selling the inventory? It has, that's why you are mixing that. It doesn't have, but on a standalone basis, does inventory has got an impact where? Where? Changes in the working capital. Simple. Followed, no? So this is a simple example they have given you, but I have shown you that exam questions will be framed with the examples plus some more additions. Okay, so write like this, a simple thing, reporting of movement. Reporting of movement. First you start with the PAT. How much is your PAT? Do you have any PAT at the end of the year? How much? 50,000. Because on purchase you don't recognize any PAT, no. We have recorded, no, this is that part. How in inventory, then it would have become very complicated. So since you, at what rate you will state the inventory, cost or NRV, whichever is low. So on debit side you posted P&L account, purchases. On credit side you posted inventory. So your P&L effect is nil on the inventory part. So the only credit which came was from the Ind AS 21 for your restatement of the creditors, for which you passed one accounting entry, creditor account debit to P&L account in INR, but the creditor is in euros. Now let us look into the non-cash expenses. Do I have any non-cash expenses? Yes, what is that? Unrealized. But it is from where? Creditors or loan? Creditors. When it is from the creditors, I look into two. Is it realized or unrealized? If it was unrealized, because credit is 4 months there. What if it was realized? Do nothing. Leave no, because this is your cash profit. 50 was a cash profit. If it is unrealized, then deduct, sorry, add back, 1 minute. No, 1 minute, 1 minute. Okay, so now see what you need to do. I'll just show you. This is an example what they have done, and I'll show you one MTP question also what they have done. Two places, two different treatments. Okay, so this is what I'm going to do it now is as per the study material. So they are telling that this cash flow, what it is there, no, it is unrealized, but don't deduct it separately. Now leave it. Is there any change in the inventory? Yes, increase or decrease? Increase. So add or deduct? Increase inventory. How much? How much? 7 lakh. Now, is there any increase or decrease in the trade payables? How much? Add or deduct? Add. So increase in trade payable. Now tell me how much? You say 6 lakh 50. Correct? If I say what is my net movement? 0. Net cash flow, because 50 plus 7 lakh 50 minus 7 lakh 0. No. Forget about this. As a layman, tell me, you have seen this question, is there any cash? Forget why you have to think like a CS student. A layman, is there any cash movement happening? No. So I am telling in my cash flow statement there is no cash flow movement. Are you clear? So this is one presentation. Alternatively, how you could have presented, I will just show you which the ICA is done in this question I have given you in part 2. Okay, after you become thorough with Ind AS 7 and all other standards and all other subject. If you find time, then I'll share you certain set of additional questions. Please go through that. There you find one MTP question. Very beautiful question. So why I didn't discuss, because this is not there in the study material. Some MTP question is there. If you see, the first part of the question is something very similar to this example. They said that you purchased goods from Europe for $2 lakh. At that time it was 50. You didn't pay the money by 31st March and the rate exchanged to 45, reduced to 45. So because of this, you made 5 rupees translation gain of 5 lakh rupees. How did you get 5 lakh rupees? 5 rupees into an exchange gain on the retranslation of the trade payables. Okay, so 1 euro is equal to 45. Yes, how did I get this 5 lakhs? Per day 5 into, yeah, it is actually 10 lakh, but they said here 5 lakhs. It is a print mistake in the MTP. No, how do I know? If I go subsequently, they said A Limited therefore records cumulative gain of 18 lakhs, where they said 10 lakhs. These two things happen. So from here I understand that this calculation what they are given is a print mistake. From later part be clear. Now how much is the unrealized? 10 lakhs, correct? But you know, if I go to the 6 marks question of MTP, if I go to the solution, see, there is a trading profit of 10 lakhs which is unrealized. So I deduct it from my PAT. Agree? I will move like, forget about all other transactions, mix of transactions. I will move like this further. When there is a change in the working capital, now tell me students, what should have been my deduction here? Is there any increase in the trade payables? How much? 2 lakh euro into how much? 50 or 45? You say 45, no? But I say I took it 50. Understood here? So, if you ask me, it's a previous question you want to do, I could have presented in another way here. What? My profit is 50 minus unrealized gain 50. Increase in inventory 7, increase in payable 7. Again, this is okay, this is more relevant. Yeah, this is what exactly. Or else I can give like this. So you have got forex gain or loss into two category. One is on CC, one is on the debtors and creditors. Loan. There are still two, operational, non-operational. If it is operational, okay, if it is a realized or if it is unrealized, do nothing. I can improve that chart like this. But if it is a non-operational, if it is unrealized, reverse. Realized, present somewhere else. Unrealized. 50,000 is unrealized. Are you clear now? So we can interpret it like this. When you classify these debtors and creditors as an operational, whether realized or unrealized, you do nothing. Why? Because it is unrealized. Definitely your creditor balance would have been more there or less there. Understood, no? You have got convinced, no? That's very important. Otherwise, I would have been in half year, mid, not able to explain my theory only. So, have you seen this in MTP question, how they did it? Okay, so anything is fine. Any method of presentation will be fine. Yes, with this, we are done. Unrealized gain or loss can be netted off with the because see what happened now. If we are looking into the cash flow statement in real life, there are so many transactions. Maybe that it may be probably permitted. Again, they said in that question also, unless specifically permitted. So in the cash flow statement, in day 7 we read. See again, I always admitted, I've been telling you from the beginning, what we are discussing it is only tip. But in detail, whatever we are learning in detail. But from the exam point of view. Followed, no? All permutation combination, what may happen, how it may come. So yes, your question is like, how should I present this gain or unrealized? Yes, if we get into the standard, probably we may find more clarity on that. But you understood in principle, no, how it works? Yes, the next aspect is the consolidation.